Hi, everybody. This is Frank Crandall, and I'm here alongside my good friend Matt Crandall. Believe it or not, it's spelled differently. But anyway, Matt is with Element Mortgage, and we've been friends for, 5-6 years, something like that.
Probably 6 years.
Yeah, and he's here in Roseville, and I just wanted to talk to him a little bit about some creative financing ways that are his company that he's doing to try to get this economy going with buyers purchasing and things like that. So today we're just going to take 2 minutes and discuss something very simple, very easy, a 2-1 buy down on your loan. But there's still a lot of people who still don't know what that is. So Matt, take it away.
Yeah, so I think as we all know, the biggest question mark in the current housing market is affordability.
Yep.
Right, home prices still staying fairly high and interest rates being high. So as a lender, as an agent, what we do for our clients is try to figure out different options and ways to help keep that affordability low and get buyers into properties in these times where things are a little bit more expensive. So as you noted, we have things called a 2-1 buy down. It's a temporary rate buy down. You can always pay points and buy your rate down permanently. This is not the same thing. This is a temporary rate buy down. There also is a 3-2-1 option actually as well. So we'll go over what those are. So we'll stick with the 2-1. That's the most common. And what that is the seller, upon you putting the offer in, you will negotiate with the seller to pay your interest rate down 2% for the first year, 1% for the second year, and you'll pay your normal market rate from year 3 and on. Okay, so 3-2-1 buy down, similar, 3% the first year, 2% lower the second year, 1% lower the third year, and the fourth year and on you're paying your normal market rate. I'm sure you're asking, what does that mean to me in dollars? Example? Yeah, so I got an example.
Good.
I'm going to put a pre thing out here that this is not any specific scenario for any specific person. This is a broad example, but this is very close to what majority of people that we are seeing out there, this is where they would land. So on a $500,000 purchase price with 5% down on conventional financing, with, let's say the rate is 7.5% that day for that person, your first year, you would be paying at a 5.5%, second year, 6.5%, and 7.5% on. So for your first year, your total mortgage payment with property taxes, homeowners insurance, mortgage insurance, principal, and interest. So this is an estimated payment, could vary depending on the property and the client and all of that. But you're looking at a payment of around $3,500. For year 2, you're looking around $3,815, somewhere around there. And year 3 on, the normal market rate, 7.5, you're looking somewhere close to $4,140. So that gives you a $634 break, helps you ease into that payment for that first year, a little bit less the second year, and then that normal market rate that you would pay if you were not doing the 2-1 buy down. Any credit that the seller gives, if you were to refinance, we hope, we don't have a crystal ball, we hope the rates are going to drop here in the next year. And if that does happen, where you'd like to refinance and get a permanent lower rate, at that point, whatever funds have not been exhausted from the seller, that goes towards a principal reduction on your loan. So it doesn't just go back to the seller. If you're to refinance within those 2 years, all of that money or whatever's remaining will go towards a principal reduction. We can also do 3-2-1, 2-1 buy downs on conventional FHA and VA loans. So all borrowers out there, and it really helps with that affordability, helps you ease into that mortgage payment. So it's a great option for people right now while rates are still inflated a little bit.
Okay, well, Matt, thank you for that.
Yeah, thanks for having me.
You know, this situation, this real estate industry is very fluid. It moves all the time. Next month, we could be talking about something else, but up to right now, this is the current status that we have as far as the 2-3-1 buy down. But I thank you, Matt, for giving us some figures and letting the folks know what they're looking at.
Yeah, thanks for having me.
All right, bye-bye, everybody.
Thanks for watching.